Welcome to the Exchanger. We're going to get straight into this portfolio update because we do not have time to waste today. But before we get into it, we got to talk about the overall market. There have been some big companies that have reported earnings. So we're going to take a look at those before we get into the two stocks that I just bought last week. Let's talk about the good first, because coming into these earnings seasons, stocks, especially tech stocks, were on fire. I mean, scorching freaking hot. So they were going to need to come into this earnings seasons, especially the big guys, and blow away Wall Street expectations to justify their stock prices. And the big company that did just that and reported phenomenal earnings was Amazon. As I'm sure most of you are already aware, Amazon beat on both the top and bottom line. They beat on the top line by $2.75 billion, and they beat on the bottom line by 30 cents a share. Pretty darn incredible earnings report. I mean, that's nearly a 100% surprise coming in from Amazon there. Amazon is the only company that I own that reported earnings that justified their valuation after this long stock market run. And they even added 10% to their valuation after their earnings. So that's the good news for now. Now let's get on to the bad news. And I say bad news because these are companies that just reported earnings that were kind of meh, and because of the recent run, people were expecting a lot of beats. Beat. They were expecting everybody to beat, but they didn't. They kind of just met expectations, and the stocks fell. But even the companies that beat expectations didn't beat expectations enough to justify their stock prices. Apple reported earnings mostly in line with expectations, with a slight beat on the bottom line, and the stock fell 7%. PayPal reported earnings in line with expectations, and the stock fell 15%. Palantir reported earnings in line with expectations, and the stock fell 15%. Roblox reported a miss on both earnings. Roblox reported a miss on both the top and bottom line and fell 20%. And finally, Rivian reported a huge beat on the top and bottom line, and the stock still fell 13%. The only two companies that I own out of these are PayPal and Palantir, but the point is that everybody kind of keeps these on their watch list, especially analysts, but also retail investors. And it's caused some general fear in the market, putting downward pressure on stocks. And these fears aren't exactly quelled by the media machine, because the media just writes what people want to hear because people read what they want to hear. So the media is going to write accordingly. This puts further downward pressure on the market as a whole. And one last thing relating to the overall stock market, the S&P is trading at the historically high end of its price to earnings ratio. But if you look more recently, it seems to be trading towards the middle of its range. And if you look even more recently, you'll see that it seems to be trading at the high end of its range. What all this data means is that the market is priced in a way that expects strong economic growth. And if the growth doesn't come, then, well, rip the stonks. Even though there's a lot of fear of a recession looming, I'm still buying stocks because there's one way you can win in the stock market every time. And that's by picking strong companies that are growing, or they're just strong balance sheet wise, and invest in them during times of economic prosperity as well as during economic downturns. So that being said, let's get into the exchangers first.
Portfolio update.
All right, so last week we had some cash on hand from our sale of Apple stock at $186 a share. And the market was red. I mean, dark red. So I was really scared. I panicked. I didn't know what to do. I thought the market was going to crash, and I didn't buy anything. I'm just kidding. Of course. I went ahead and I bought my favorite value stock, PayPal, and I went ahead and I also bought one of my favorite tech stocks, Palantir. Probably my second favorite, only because we have Tesla. I mean, Tesla's just incredible. It could be tied with NVIDIA, but Palantir is just incredible. First, PayPal. Now, with PayPal, nothing has really changed to me. They reported earnings. They're growing the top and the bottom line. They're growing the bottom line faster than they're growing the top line, which is a good sign for any company. They're trading at a forward PE that is super cheap, around 12-ish, depending on how you price it. And Wall Street has their revenue growing in the near future by a double-digit percentage point. So the low forward PE of around 12 is very representative of a company that isn't really growing. Yet Wall Street has them growing revenue by over 10% in the near future. So clearly that's not the case. PayPal looks to have a bright future ahead of them, both as a stock and a company. And once they find a new CEO, I believe the stock will be back on the up and up again. Before we move on to Palantir, I got to address a phrase that's been going around, a stupid phrase. And that phrase is, PayPal is the next Meta. I keep hearing this. PayPal is the next Meta. PayPal is the next Meta. What? What are you saying? PayPal is the next Meta. Like, sure, the stock could go on a 200% run, but you could just say that this is the next 200% stock, which I believe is very possible in the case of PayPal. But it's not the next Meta. I mean, Meta and PayPal have nothing in common. If you look up what do PayPal and Meta have in common, you get search results for how to buy cryptocurrency with PayPal on a decentralized wallet called MetaMask. Not even Meta. It's crazy. So let's just stop comparing PayPal with Meta. Also, another search result you get is who pays the PayPal transaction fees for ads on Meta. So clearly these companies have nothing in common. So let's just stop using the phrase. Can me and you, we just agree that we got to stop using the phrase? It's unbelievable. All right. That being said, the companies have had some things in common. I mean, they've both had a few rough quarters financially. However, Meta's were caused by self-destruction, and while PayPal's were not caused by self-destruction, they still happened nonetheless, and the stock price still tumbled. However, PayPal's kind of got their shit back together, which is why I've been buying the dip, because the stock hasn't reacted accordingly, and they're on the up and up again. Moving on to the second stock I bought, and that is Palantir. I bought Palantir stock before earnings, and there was a lot of hype coming into these earnings, and the earnings came in and they were kind of underwhelming. I mean, they weren't great, and they weren't disappointing. They just met expectations, and meeting expectations was not enough. There was a lot of hype coming into these earnings around Palantir, and meeting Wall Street expectations was, like I said, just not good enough. The stock fell 15%, but if you look at the fundamentals, they are just the same. So I still love this company in the long term. Looking at their earnings report, they were gross profitable exactly as expected, just enough to remain eligible for S&P 500 inclusion. Revenue grew by a double-digit percentage year over year. Commercial revenue growing pretty nicely, 10% year over year. And here's the most important part that all Palantir investors care about most. Customer count up 35% year over year, 8% sequentially. So yeah, the fundamentals are actually quite strong for Palantir, yet the stock price is down 15%, which is all fine. I'll just buy more. Thank you very much. If you're wondering why Palantir investors care more about customer count than anything else, it's because Palantir's strategy is to capture the entire market, yes, the entire market share, and then figure out pricing and therefore profitability later. They're currently just remaining barely profitable to become S&P 500 included. In fact, Karp reiterated this in the Q&A portion of the Q2 earnings call. And if you want to understand why this strategy is going to work for Palantir, you really have to understand their products. So if you don't understand their products, I definitely recommend starting by checking out my video, What is Palantir?, where I go through what Foundry, Gotham, and Apollo are, as well as their new thing, AIP, Artificial Intelligence Platform. So if you want to know what Palantir is doing with their pricing strategy, you want to know why it's going to work, you got to check out that video. That's all I got for this one. Make sure you follow me on X at TheExchanger101 and follow me on Instagram at TheExchangerOfficial. And as always, The Exchanger signing off. Peace.